SMCI, or Super Microcomputer Stock, is every investor's dream stock. A technology stock, a growth stock, Supermicro is everything with an edge over the industry. If you have been looking to invest in this stock, this video will help you make a decision. We will talk about SMCI's valuation, revenue, cash flow, earnings, holdings, float, book value, Wall Street's target price, and the margin of safety. We will also discuss where Supermicro belongs alongside its competitors and its financial strength, volatility, and momentum. At the end of the video, I will give you 2 investment strategies that are customized for SMCI, which you may find interesting. On this channel, I talk about money, trading, and investing. If you have not done it already, take a moment to subscribe to my channel before we jump into the discussion. It helps me a lot. Thank you. SMCI is trading at $437 today. Over the last 1 year, the stock grew roughly 80% from $243 to come to today's price. While that is true, it is also true that the stock reached a record high of $1,229 in March 2024. That means it is now trading 65% below its all-time high. Let's talk about Supermicro's share float first. It has a float of 43 million shares. This is important because the float of a stock is directly connected to its volatility. SMCI could rise from $311 to $1,229 within less than 2 months because of its relatively low float. The float is the number of shares available to the public for trading. A smaller float means a smaller supply of shares in the market, which pushes the price higher fast when there is a growing demand for it. In other words, you need a small amount of money to push it up. Against Supermicro's 43 million shares, Palantir has 2 billion shares, Intel has over 4 billion shares, and Nvidia has 23 billion shares. Nvidia needs $23 billion to increase by $1, whereas the same 23 billion will push Supermicro 92%. I understand that Supermicro will have a 10-for-1 stock split on October 1st, but that too will not increase its float to the ridiculous number that some of the popular stocks are having. On the contrary, the split will make the stock available to more retail traders than now, which will help it to rise again. Supermicro lost a large part of its value recently due to an investigative report published by Hindenburg Research on the 27th of August. The stock fell quickly following the report, but ever since, it has somewhat stabilized. On September 6th, Supermicro made a swing low of $386, but quickly rose above the $400 mark, before trading at over $450 within a week. This report put enormous pressure on SMCI's market cap. Before the report, its market cap was $35 billion. Now its market cap is $25 billion. At $25 billion, it offers at least a 20 times growth before it becomes a $500 billion technology company. But how good an investment will Supermicro make at $437? Let us now look at its valuation. According to Simply Wall Street, Supermicro has a fair value of $2,577. That makes it 83% undervalued currently. That may sound very generous as a valuation, so let us look at some conservative valuations of SMCI. Guru Focus puts its fair value at $754. That offers a 42% upside over its current price. The discounted cash flow model, or DCF, puts the fair value at $873. Let's look at a more stringent conservative valuation. The Peter Lynch model valuation puts SMCI's fair value at $515, proposing an upside of 18%. Wall Street analysts put SMCI's average price target at $761, a 74% upside, and its maximum forecast at $1,500, a 243% upside from its current price. A conservative Wall Street target price sees the stock trading at $850 next year. That is an upside of over 45% from Supermicro's current trading price. In the next 3 years, Supermicro's revenue is predicted to grow by 47%, while the US market and the computer hardware industry are to grow by 9% and 14% respectively. At that rate, Supermicro will become a $32 billion company in 2 years and a $38 billion company in 3 years. In that case, it will recover much of the decline it has experienced in recent months and will offer today's SMCI investors a handsome return. The price of popular stocks is heavily influenced by the market sentiment. What is market sentiment? It refers to the overall mood of investors about a stock or the stock market as a whole. Market sentiment is bullish when prices are rising. It is bearish when prices are falling. As you can see in this image, the market sentiment towards Supermicro has rarely changed over the last 3 months, although the price of the stock fell from $900 to $400 or even less during that time. The market still has the same enthusiasm for SMCI as a growth stock as it had months ago when the stock was at its peak. Now let us talk about SMCI's estimated earnings per share, or EPS, for the next 3 years. In 2024, the EPS is set at $20. The lowest EPS for 2025, 2026, and 2027 is estimated to be $28, $37, and $42, while the highest EPS estimates for those years are $46, $59, and $61. Notice that the lowest estimate at the end of the 3rd year is also more than double of its EPS today. Supermicro's PE ratio is about 22. PE ratio is a valuation metric that confirms whether the earnings of a company justify the stock price. Compare Supermicro's 22 to Apple's 34, AMD's 191, and Intel's 92. Supermicro's PE is only 10% of Palantir's 214 PE ratio. Palantir will need 214 years to earn the market cap it has today at the rate of its current earnings. SMCI will need only 22 years. Because of the recent sell-off following Hindenburg's report, Supermicro is now sitting at the oversold zone with a relative strength index, or RSI score, of 25%. The RSI score improved once SMCI bounced off the swing low 2 weeks ago. From now on, the stock may only move up to gather momentum to be a super growth stock again. It is no surprise that the majority of the quants provide a buy or a strong buy rating to Supermicro at this moment. I believe SMCI will reclaim its all-time high, and I believe it will become a $500 billion company down the line, providing its investors a 20x return. There are not many great ideas in the market today that can give you such an enormous return on your investment. Apple, Nvidia, or Microsoft will not be $15 trillion companies, although they are super growth stocks, but instead, Supermicro has the highest chance of becoming a $500 billion company in the nearest future. It has to grow even less than where Tesla is today, after losing 33% from its all-time high to do just that. Now let us talk about how to invest in Supermicro. How are you going to proceed? The number one strategy is investing in SMCI by selling a put option. Interestingly, SMCI has gained over $20 per share before I finished making this video. Even at that price, selling a put option with a strike price of $450 and a 2-month expiry date will bring you about $50 per share, which is as much as $5,000 per option contract. This money will come to your account. This is your income. If the price of SMCI is above $450 by the option expiration date, you will not buy any shares, but will still keep this $5,000 as profit. The shares will be assigned to you at $450 if the price of SMCI is at or below $450 at the end of the option expiration date. In that case, you will still keep this $5,000 as option premium. That means that you will not lose any money by investing in SMCI until the stock falls below $400. You can sleep well at night, understanding you have an excellent margin of safety in place. You can implement the put option strategy only if your trading account allows selling cash-secured put options and you have over $45,000 to allocate towards SMCI. If you have a small account, you may move to investing strategy number 2. According to this strategy, your buy zone will be $400 to $450. You will buy SMCI in batches of 10 to 20 shares, and you will buy them any day the stock falls by $15 to $20. It is better if it falls by more. That will allow you to buy at a better cost per share. Don't lose it when the stock retreats after you have taken a position in it. Stay calm. As you can see in this image, SMCI always recovers a 10 to 20% decline quickly. Over the last 90 days, SMCI fell by more than 8% compared to Dow and more than 15% at least twice, but it always recovered. When you see a decline of more than 5%, invest 1/5 of the money you have allocated for SMCI. Stop investing when you have acquired enough shares you are satisfied with. As a rule of thumb, do not invest more than 10% of your portfolio in one stock. If you are a conservative investor, don't even invest 10% in one stock. Invest only 5% of your portfolio in one stock to remain on the defensive side. If you don't know how to sell a put option, watch this video where I show how put options work. You can apply this strategy to buy Tesla, Nvidia, MicroStrategy, or any high-flying stocks at a price cheaper than their market price. It is like making money in the stock market without buying any stocks. Supermicro manufactures high-performance and high-efficiency servers. It offers management software and storage systems. Its main competitors include Omnicell, Fitbit, Huami, One Stop Systems, Dell Technologies, HP, Hewlett-Packard Enterprise, Seagate Technology, Pure Storage, and Logitech International. No doubt, it is one of the main forces within this niche. It has come a long way from 2007, when its shares were sold at just $8 through an IPO. It knocked out Whirlpool from the S&P 500 and Walgreens Boots Alliance from the NASDAQ 100. It has only good days ahead, especially from where it is sitting now. I am taking a position in it. What about you? Leave a comment below. Thank you.